What's been the hardest thing for you trying to use this law with no guidance, other than people you've hired, but no basis to go back and go, well, so-and-so did it, we're groundbreaking.
Right.
What was it about?
I think that the biggest challenge is that there's so much ignorance in the general public. So I've been doing speeches at broker-dealer conferences and other places for the last 2 or 3 years, and literally today, maybe 5% of the people even know what a Tier 2 Regulation A+ offering could be. So there's just a ton of ignorance. I mean, it's not necessarily malicious, but there are a lot of people who don't understand it. And probably the biggest hurdle for us has been the fear factor. There's so many people that are afraid to do something new. The broker dealers are afraid to participate. A lot of the legal counsel and the advisors that you might go to for assistance are very fearful of a misstep because they don't really know where the landmines are. And of course, that's how the SEC does it, right? They sort of paint everything gray and tell you to find your way, and then every now and then they just blow you up for fun.
And I can tell you from experience, the last filing that I did with BrewDog that I was talking about, we did some things differently than anybody ever done before. These guys are marketing gurus, and they said, we want our offering circular to have a lot of pictures in it. We want it to look like a brochure, not an SEC filing. And I said, wow, I don't know the SEC is going to like that very much. Yeah. So we did it, and amazingly, and warned them over and over, there could be some landmines here. Who knows what's going to happen? Worst thing that happens is we refile it and fix it. 261 pages of documents filed with the SEC. We got back 9 minor comments, none of which had anything to do with the pictures.
Wow.
And so I was thinking they're going to say, oh my God, you have these pictures of beer and you have pictures of people drinking and you have this, none of that.
Sin.
Yeah, exactly. And so it's really interesting. We did this with no guidance whatsoever. So this is why I wanted to ask you one of the other things that leads to. People think of this when they first thought of it as, we're going to go out to the general public and sell. You figured out, which is something I've been preaching since I started talking about this, that's only part of the process. How did you come to the conclusion that you needed to involve broker-dealers and syndicates and others and not just go to the general public?
Well, you used the word relationship, and so for us, what we wanted to do was to leverage the relationships of trusted advisors that are already in the business of talking to people about their investments. Unfortunately, our company is not a sexy watch or a cute little car. We provide a service that's very profitable, it's relevant, it's necessary, and there's an enormous opportunity to disrupt the commercial real estate business, but it's not that sexy. So it's a little tougher, I think, if you don't have a sort of a retail consumer product, a little tougher to build that audience. And so we had relationships in the broker-dealer world, and we wanted to have the value of the relationships that advisor has with his or her client, so that we could tell the story and get a little bit beyond just the sort of the bling effect of some of the consumer product companies.
Did you find pushback? Because I know in my dealings with broker-dealers and particularly with institutional investors, no matter how good, I'll give you an example with Sun Dental, who I mentioned. That's a company that if they had done this right and gone through the network, it's a very sellable security through the broker-dealer network. But going to the general public and trying to explain what they're doing didn't work. I also know that you get a lot of pushback. When I sit down with broker-dealers or with people, especially your traditional Wall Street type people, they look at me and go, we want to see this work first, which is why I'm pulling for Steve so well. He's the first one to do the combination.
No, the wait and see is 99% of the people are looking at it. They're interested in it. Some people even buy into what I think is so exciting about it, which is Regulation A+ actually for the first time closes the gap between investors and opportunity. I mean, this is literally monumental reform to our securities laws. It hasn't happened in, I don't know, certainly in my lifetime. There's never been a time where it got easier for an investor to get their hands on an early stage investment. And so we see this at the global level. We see this as an opportunity that's unparalleled. So we have a lot of companies in this country that don't have access to capital. There's over 27 million privately held companies in the country, representing almost 80 trillion in market cap. The entire publicly traded equity market is under 20 trillion. So you have essentially an emerging market right under your nose that's 4 times the size of the publicly traded marketplace. And for the most part, those companies do not have access to capital. So this is, I think, an enormous opportunity. But you definitely have, pushback. The institutions are telling us, oh, it's new. These guys are going to be traded OTC. We've never done an IPO to OTC before. Well, no kidding. It hasn't been possible until now.
Right.
But their interest in going first or being on the leading edge is really close to zero. And we have a lot of that from the broker-dealers as well. You'll have interest at the sort of strategic executive level, and then as you go through the due diligence process and start talking to all of the compliance type folks, everything slows down. But so today, and that's just part of the reason we wanted to go down the broker-dealer channel, but we also wanted a lead investment banker. And we were fortunate enough to make it through the screens at W.R. Hambrecht. And some of you may know them from the old days, Hambrecht and Quist. Bill Hambrecht has been a pioneer of innovative capital for a long time, but these guys were involved in Google's IPO and Apple. They funded Adobe systems. So they're technology and specifically disruptive technology leaders. And they have been instrumental in our offering in building that syndicate. That selling group is up to now 15 broker-dealers.
That's great.
And that's been a critical piece of it. And our crowdfunding stuff, we are out advertising, and it is beginning to build some traction. But it's just not that sexy story. I mean, if I'm your spokesperson, then pretty sure it's not sexy.
If you'd seen the picture of us like 30 minutes after this, it was a little sexier probably, but not to any of this room. Let's talk about the elephant in the room, the gorilla in the room, whatever the word is, the cost. This thing is not cheap to do. I don't know how much you're willing to share with the audience about what you've spent, but I'll give some examples on my end too. It can be pretty costly to run one of these because you're basically doing a public offering.
Yeah, I mean, for us, it has certainly been expensive. I mean, we're fortunate. Allegiancy is, we've been in business for 10 years. We're profitable. So there are resources available to fund this. But, legal fees, probably $150,000 to $200,000 by the time we're finished. Accounting, going back and doing the audits, we spent $75,000, which just makes my skin crawl. But $75,000. We'll spend probably $250,000 in marketing. So if you look at the whole picture, it's going to be $600,000 to raise $30 million, which is not a bad deal in the grand scheme of how you raise capital. I mean, it's not at all uncommon if you're doing a private equity deal to have, a 10%, or Reg D private placement to have 10 or more percent of the offering be consumed in the process. So not cheap, but the best possible way to raise capital in today's market. And then for us, the liquidity is a big deal. So Allegiancy is growing partly by making acquisitions of other companies. And as a technology company, we're competing in the marketplace for tech talent. And if you don't have stock options and a path to liquidity, it's harder to recruit the best people, and it's harder to get acquisition deals done. And so for us, that liquidity component is an important piece of it as well.
Let me also add to that, when you talk about raising money and spending $600,000 to raise $30 million, a good chunk of that money is also helping to market your business. And that's the one thing people kind of forget about. So when Allegiancy is in the news and Allegiancy is out there in videos and people are talking about them as an investment, that helps you with your acquisitions. It helps you with your awareness. It helps you with your marketing to get new properties, to people to hire you. All of this is sort of that's what's so beautiful about this law is you can use it even if you don't have a consumer-facing business. It's still good PR. It's still good marketing if you do it right and it's positive. Now, is it good PR for Sun Dental? No. They went out there, they didn't raise money, they shut it down, they hope nobody Googles it and finds it on the internet. But if you do it right,
you are talking about it.
Well, yeah,
nice.
And it's being videoed, and so sorry, Sun Dental. But if they had done it right, if they'd hired me. No, but the bottom line is now. Let me address one more thing too. One of the biggest problems I found from the very, very beginning is the professional costs that are involved. Being a lawyer, wearing my lawyer costume today, people come to me and the first thing they say is, how much is this going to cost? And I always say the exact same thing. I won't tell you what the number is, but I always basically say the exact same thing, but I tell them how you pay me is what's going to be the difference. Because if I think you're going to do this right and you're going to follow the plan and you've got the money to market it right and you have a good plan in place, I'll backload 90% of what I get paid to make sure I'm not the person stopping them from going forward. Now that's something new, and I'm starting to see other lawyers copying what I'm doing because quite frankly, I'd rather just get paid a tiny bit up front to cover my firm's costs and make sure they're successful and make sure you're out there and get paid later than have a company unlike yours. A lot of companies can't afford to spend $600,000 to do this, but they've got a great company that could really do this if they could cut that down by half or a third. And so I always look at it as a picture, and I've got an accountant I mentioned before who will also do this, not for a company like yours where it's a big history, but smaller companies. It can be done more affordably, but it's still expensive.
Well, and we've screwed some stuff up along the way too. So, we have wasted dollars in marketing where it didn't work. Now, you can always look at that and say, I was learning and that's just part of the program, but it still feels like wasted dollars when you spend 10 grand and nothing comes back from it. So there's a lot of room for improvement. I think that the costs a year from now are going to be half of what they are today.
Exactly.
And so some of the pioneering is expensive, and we may be bearing some burden that others won't have to. But I think you're seeing a group of people coalesce, from broker-dealers to marketing people to lawyers to accountants. There are secondary trading platforms. There are an awful lot of people that are getting excited about this. And the fact that there are 100 deals in the pipeline is really exciting. There's so much opportunity out there if we can merely connect capital with people who are willing to put it to work. There's still vibrancy in the entrepreneurial class in this country, which, given what's going on in the last 10 or 15 years, is almost amazing in and of itself. But if we can move away from, and there's nothing wrong with this organization at first look, this is great, but this is really inefficient in terms of raising capital. So if I'm an entrepreneur and I fly to Atlanta from Richmond and I spent, Delta's very proud of their airplane seat, so I spend $600 to get down here, and then you spend a whole day down here, and then next week I'm in New York, and then I'm in San Francisco, and pretty soon, I spent $50,000 flying around the country talking to people. And so there's an awful lot to commend the Reg A Plus and the internet platform, because it gives all of the potential investors the opportunity to learn a lot before they have to invest that amount of time and money in a face-to-face. I talked to a guy yesterday who was raising a real estate fund. And this was a few years ago. He had 287 face-to-face meetings all over the world to raise $25 million.
It's amazing.
That's painful.
Yeah, it really is. One last question and then we'll wrap this up. So Steve, you talked about going on OTC, and I want people to understand, because I mentioned this in the talk, but this stock is by law immediately liquid. So when it's sold, it is tradable. You can find a private buyer. There's different things that are coming out to be able to do this sufficiently, but I have a client, for example, who says we don't want to go on OTC. We want to go straight to NASDAQ. Sure. And you can do that with this law. But talk about a little bit about the process of what you've gone through with getting through the A+ and then getting listed to be able to have that market and that exchange.
Well, there are rules everywhere, and so there's a ton of little detailed stuff that seems kind of unimportant to me as a entrepreneur trying to run a business, but there are lots of little boxes to check along the way to keep OTC happy, to keep SEC happy, and you have to go through that process. So it's not painless, to be sure. And there are ongoing costs. You have audit costs, you have filing costs, you have to pay OTC. Who knew that you had to pay them to be listed there? And so there are costs related to that. But it's dramatically cheaper than going straight to NASDAQ.
Yes.
And so, our plan is to be OTC listed this round. We expect to do another round a year or two from now, at which point we'll be probably a $500 or $600 million company, and we would uplist to NASDAQ.
Perfect.
Something like that. That's the plan.
Terrific. Well, Steve, thank you, and thank you all. I'm going to shut
we'll
this
be
down.
around most of the day, so.
Thanks, Stephen. Good luck.
Thanks.